Welcome to the Asset Coach and Tax Strategist YouTube channel. If you're a subscriber, thanks so much for subscribing. If you're a first-time viewer, thank you for spending your time here with us. If you like our content, please give us a thumbs up. For you new folks, Asset Coach Tax Strategist YouTube channel is based on the book Economic Termites. This is a book that I wrote a few years ago talking about taxes, inflation, time, laws, and regulations. Also, I wrote a second book called Farming Assets. Those two books is really what this whole channel is about, addressing those situations and how they affect you and I in our ability to grow our wealth. So as an asset coach and tax strategist, my name is Robert Wolf. I am the CEO and founder of Terra Firma Business and Financial Consultants and its affiliates. We have a bunch of companies that we've built out this ecosystem surrounding the basis of what we talk about on this YouTube channel. So if you're not a subscriber, hit that subscribe button. We drop episodes every Thursday. Again, if you are, thanks so much. And let's get into this next episode. Welcome to another episode of Asset Coach and Tax Strategist. And so today's episode is really just kind of a viewpoint, an opinion. I guess that's what really this is all about, right? When you have a YouTube channel, you just kind of spew your opinion on and your thoughts. And what's interesting is I watch a ton of YouTube guys on different aspects of various areas of investing, whether it's stocks, crypto, real estate, commercial real estate, land real estate, business, buying businesses. You look at my subscription list and you'd be like, man, this guy is extremely confused. But the reality is that you have to know what's going on, right? And so our thought process and the way I view things is that the tax code is written for business owners. And then, so if you want to reduce your taxes, you got to be a business owner. You got to follow what the IRS guidelines tell you, not fight the IRS, not fight the rules, not try to find loopholes or try to deceive and be cute. Not at all. It's like when you leave a car dealership. You ever leave a car dealership and you're like, yeah, I got one on over them. No, you didn't. No, you didn't. They're not in business just to give cars away. They are always making money. You are never getting one over them. You may not be paying as much as you could have been, but you did not win that negotiation. Period. Same thing with when you go to gambling, right? You may walk away that time winning, but if you were to look at everything you have done, more than likely you are still negative, but you feel great. The sounds, the experience, it's going to Starbucks and buying coffee for $7, right? It's coffee, for goodness sakes. But you're spending $7 once, sometimes twice a day at Starbucks or a similar type of coffee shop. So psychologically, we feel like we have this one up on the system, if you will. Call that the American attitude, call that the human attitude. I don't know. But at the end of the day, that's kind of the psychology and the thought process we have. So the reason why I have all these guys is because, and watch all these guys and do all this studies, because I do want to make decisions that take a step forward, not steps back. Now, you do need to take steps back. So it's an obstacle course, right? And if you've ever watched like Indiana Jones or any of these shows where they're going through a place and this place that they're going through is booby trapped, right? And do they always just go forward? No, there are times where they go forward and they're like, uh-oh, and they take a step back, and all of a sudden a big old sword or something comes swinging by, or an arrow comes shooting by. In business, in investing, in wealth accumulation, it's not always step forwards. You do have to take a step back in order to take multiple steps forward. The same reason why we talk about pruning plants or pruning a rose bush allows that rose bush to thrive and grow, right? So it's the same thing with building wealth and saving money on taxes. They're one and the same. Tax savings and wealth accumulation are one and the same. The wealthy get wealthier because the tax code's written for them. The IRS needs the wealthy to invest into the system so people can have jobs and generate income, and that income gets taxed, and that tax revenue is what the government needs. It's a system that is designed for everyone to work cohesively, not a you against me type thing. Okay. Now, why am I bringing up all this and kind of this thought process is because as I'm reflecting on what's going on with the subprime auto market, lending market is collapsing. Right. We've seen you go buy a car, and man, the average car I think now is $50,000 or something to that effect. I just saw something. Maybe it was for the first time. It's like 40,000 or something. It's a ridiculous amount. You can't go get a normal car because they're all electronics, right? They all have these big screens. They all have all these bells and whistles, which all cost money. And that gets passed on to you and I. That's part of the inflation of car buying, right? So when we don't pay cash for a car like our grandparents used to, we got to finance, and you need a car nowadays to go get a job. So you kind of need a car. It's a necessity. And and so certain things like a phone's a necessity. Well, they're $1,000. It's a computer in your hand, right? But they're $1,000. Right. So when we go through this process of our living and our lifestyle, there's certain transactions that we have that we use. And because of the cost of cars going up, people who maybe not afford a car or couldn't ever pay cash for a car, go finance a car. Well, the cost of used cars because of 2020 to now has skyrocketed. And so sometimes it's just better to go get a new car than an old car. Well, those new cars, when you buy a new car, that drives the price of the next year's new car to go up because you're buying these. But the used car market, you get the idea how it's all kind of connected is what my point is, right? So all of a sudden we have the subprime auto loan financing market is collapsing. And that's affecting. We had the government shutdown, right, which was not expected. And we anticipated when Trump gets into office and all these changes are going to happen to the crypto market and stuff. And so listening to some of these guys, and there's a lot of really scary things if you think about it. And then you can put your head in the sand and ignore it and stuff. But at the end of the day, it's just your head in the sand, right? Everything else is out and exposed. And if you've ever bent over to lean down, what's exposed? Yeah, you're going to get kicked in the behind. If you don't get your head up, be aware and get it on a swivel. That's what the guys in the military, right? Keep your head on a swivel, right? Be aware, be vigilant. Always be ready. Don't try to get ready. Be ready. Be prepared. So I bring this up because here's an interesting aspect that somebody brought up in one of the YouTubes I was watching, and it made me think that holy cow, we create systems based on our desire mentality. Let me explain. So think about when we watch movies about kings and queens, right? How did that whole thing work? Why was there a king? That was somebody who stepped up and said, I'm going to protect you and you're going to help protect me. And if we need to go to battle, we're going to go to battle together, right? And then what happens? There's a cost to that. So the king starts charging a tax to the people, and the people are working, right? And then we go on to the systems today, it's the same thing. Countries are now that kingdom, right? Systems are designed to where you and I are still paying taxes to pay for that system for that protection. Right. So when we start looking at things and like, oh, well, from a financial perspective, the who backs that currency, who backs that tax, who backs the value of the dollar, of the trade, it's the king, it's the system, it's the central bank in our situation. Right. So the United States government backs the dollar paper through the central bank, right? The Federal Reserve. Well, what's the backing of that? Well, it's just me, the United States. It used to be gold. And then from Nixon to now, it shifted to no longer the gold system because we started using this monetary system and utilizing inflation and kind of the Federal Reserve's tracking and basically allowing inflation to have wealth created. That's why there's more wealth, and the United States is the wealthiest country that there's ever existed because of that. It would be a lot less if we use gold continued as the backing. But everyone looks at gold as that value, that hedge. Well, that's just to make us feel good. If all shit falls apart, what are you going to do with a gold bar? What are you going to do? You're going to pull out the gold bar and just shave off some shaving and get that bottle of water? Right? Oh, I need that cow. Here's the gold bar. I'm going to start shaving it off. No. The system is designed gold to be a safe haven for us to distract us from the reality of humanity, survival, fight or flight. But instead of that, because that's fear, that's scary, right? We don't want people to feel bad. We don't want people to be worried. We want everyone to have this smile on their face and they can be whatever and whoever they want to be. It's okay. Just say what you are and you are type mentality. And that's not the reality, is it? The reality is that we're still cavemen and women. We're still fighting for survival. Sure, we're not worried about saber-toothed tigers anymore. But the humanity hasn't changed. There's still that necessity. We still need water. We still need food. Still need air. So we've built out these systems over the centuries to be able to continue to survive and thrive, and things improved. And sure, we may flip a light and we have a switch and we have lights. We may turn a knob and we have water, right? We turn a little knob and all of a sudden we have a flame and we can cook, right? So those things a basic caveman didn't have, and it was struggles from centuries to now. The basic humanity of what we are and what we need is still the same. Why am I talking about this? I'm not telling you to go crawl into a closet or under a desk. I'm not doomsdaying this. What I'm trying to do is be real with the situation, because when it comes to a new currency, and here's the point of this whole episode: Bitcoin, crypto. I'm a fan of crypto. I'm a fan of Bitcoin. I like the ability to have a different sort of currency that can separate us from all the others. But here's the problem. You ready? Humanity and the basics of the pattern of humanity. Oh, Bob, what do you mean? Well, what's the point of Bitcoin and crypto? Decentralization, right? Hey, it's separate. But what was everybody excited about with Trump coming on board? Oh, he's going to give us regulations that are crypto friendly. Oh, so we're not talking about decentralization. We're talking about the ability for a governing body to give us the okay to utilize this new currency. Interesting. Well, why do you say that's interesting, Bob? Because what we're doing is we have this decentralization. Yeah, freedom. But what's happening? We're walking towards financial slavery, because that's the system. That's what we do as groups, as humanity, as mobs. We follow to the flow of the flame. And as we get closer to the flame, we get burnt. What's happening to crypto right now? Let me ask you this. Okay, crypto's decentralized. BlackRock. BlackRock's one of the problems of our system, right? But people keep throwing money into BlackRock, and they have trillions of dollars. BlackRock's horrible, blah, blah, blah. Here you go, BlackRock. Come and go invest my money because you're earning 12% when this guy over here is earning 10%. Okay? What if BlackRock owned all 21 million Bitcoin? Would it be decentralized now? Think about that. Let me pose that question. Think about what would happen if you have all these central banks around the world, these countries, they're buying up gold. Look at gold. Gold's doubled in price. Why? Because all these central banks are increasing their gold reserves, right? And there's statistics saying that when gold doubles in price, there's going to be a negative economy. Now, because we're a global economy, it spreads around the world. Okay, so all these countries, and what do we keep seeing? Oh, new gold reserves found in China. Oh, new gold reserves found in Ecuador. Oh, no, new gold reserves found in the States. Okay. So gold is a natural resource that we've created into value, but it's not an equivalent to Bitcoin. Stocks, bonds, mutual funds are somewhat a physical asset because it's backed by a company and what that company is able to grow and do. But we saw in the dot-com era and even today that there's companies that have valuation that they really don't have a profit that yields a valuation that they should have, right? But the valuation is the value of that particular company. That's why when we work with our members, we don't talk about their balance and their net worth. It's part of what that's part of the core basis. But if the tax code's written for you to as a business owner and you want to save money on taxes and you want to kind of build your wealth, you need to think like a business owner because that's how the system's designed. So you need to look at your valuation. How am I valued? If I'm making $1 million of income, my valuation is I'm worth $1 million. I'm the human. Now I can go to the next company down the street and say, "Hey, I'm $1 million. I'm going to negotiate my pay at 1.1 million. You're the value, and the valuation's between you and another party agreeing to your value." The same is true for a business, right? And so when we have these businesses valuations, it dictates what that business is worth. And so that business can go to a bank and say, "Oh, our valuation's this. Here's our financials, and we're valued at this." And what does the banks do on the business side? Give you money, give you liquidity. Because if you're valued at a certain amount, they want money, right? They want to make some money. And so they'll lend you money so you can make more money and increase your valuation, increase your revenue, increase your profit, and they'll get a portion of that. People don't realize that you could be a business and not have profit and still thrive and grow. Amazon's done that. Businesses have done that for years, where they take their profit and they pour it back into the system and pour it back into businesses and continue to grow their business, but they're not showing a profit, but their business and valuation is growing. Is that a failed business? I don't know. Ask Amazon. Okay. And the government wants that. Why? Because how many people does Amazon employ? How many people sell product and goods and services on Amazon? And how many of those people pay taxes? So do you think Jeff Bezos should be paying all these taxes when the reality is Amazon as a business has created more taxpayers and more tax revenue than Jeff Bezos himself could ever pay? That's why I talk about the IRS and you are a business partner. They invest in you by giving you the tax code, and in return, you get some benefit so you can take your cash, your capital, and go back into the system and grow it so you can generate more tax revenue for the government. That's the system. Makes a lot of sense. That's why some people farm corn, some people raise cattle, because you and I need both food that we need, right? And we can't do all that work ourselves, so we have to hire help. Those people get paid for their time and service, and the government earns revenue off of that in taxes. So when we look at this system of decentralization in crypto, is it really? Have we really done that? Have we really accomplished that system when really the flow of money and the people who control that flow of money control the system? And if those people with the money control more of the decentralized, then does it not become centralized? Now, it may not be a particular country, but it could be a particular investor or a particular company that controls that. And no longer is it decentralized. Oh yeah, but Bob, but I can own a portion of Bitcoin and no one can take that away from me. I have that. Okay. But you don't control that if somebody else has a larger majority and a larger share and they're sitting and holding on that. The whole point of valuation is supply and demand. So if they own the majority of the supply, sure, there's maybe a demand for that. But if they're not willing to give up that supply, or what do? They sell off a portion of it. And by selling off a portion of it causes it to go down. You and I are like, oh, maybe Bitcoin's not what we thought it was. So you sell your fraction of share of Bitcoin, and there's 100 people like you, and it frees up, let's say, 40 Bitcoin. Do you think they don't know that? And that now they come back and buy what they sold and buy what everybody else just sold, and they gather more? Do you not think that the people that are in control are creating the supply and demand to be able for them to collect more? Do you not believe that that's not what's happening? And does that mean that decentralization never goes to centralization? I pose that question, I pose that thought because it's making me think. And therefore, you shall and should as well, which is why it's so important for us not to just to be in one particular asset class. I have a handful of members that are we call members that are doctors, and they make a great doctor living. And so what they started doing was building up investment portfolios because they wanted a physical asset. And they have some stocks, but like most of us, we're like, well, I'm not sure about stocks. I don't feel like I'm in control. But real estate, I can see it and feel it, and there's a value, and I can grow it and build wealth over a period of time. And so they do that. So they do that. And so what happens is that now they have two income streams: the doctoring income, which they're not in control over because laws and regulations can change how they get compensated. And then they have this large asset base of real estate that the laws can be changed and affect how they get compensated and the value of that. The market goes down, the economy goes down. Does their real estate value go up, or does it go down? Or do they have a diversified portfolio, or are they in different areas? So one of the things that we just need to think about is, okay, what's this look like? Nothing is ever not correlated. Everything is correlated in economics. It's all correlated because there's nothing outside of the system. It's all part of the system. So nothing is uncorrelated, but it is when you talk about other particular assets. So for example, stocks. If I own investment property, real estate, then yeah, that's not correlated with stocks, and stocks aren't correlated with my real estate. They're uncorrelated, but they're all part of a system that's affected by the economy, politics. Well, no, Bob. Well, real estate stands the test of time. Well, it has, but I mean, the reality is that when you look at negative economic situations and you're renting to people, and the people who rent usually are people who don't find the value of buying a house valuable or can't afford that, and so they need to rent. And if rent has continued to increase, and all of a sudden rent increases and you're making a decent amount of money because of that, and you're patting yourself on the back and said this was a great idea, and then economically things go down. And then what happens to that supply and demand? Now they can't afford that rent. And so you got to evict them, but you can't get anybody else in there now because your is too high because the economics went down. So what do you have to do? You have to got to lower your rent. You got to lower your rent until there's a price point that someone says, "Oh, I'll rent from," and you're like, "Yes, all right, great." Is that rent above or below your expenses? You're no longer bringing in what you did before. So remember my conversation about sometimes we just got to take a step back in order to take a few steps forward. We got to prune a rose bush in order for the rose bush to thrive. The same is with our assets. The same is with our decisions and how we move forward and building our wealth and being mindful and thoughtful. Sure, if I can save money on taxes legitimately, of course, and just follow the tax code and go into this partnership with the IRS, not continue to foster this adversarial relationship with the IRS. But if I were to say, okay, we are business partners. Okay, so what's this mean? What do I have to do in this part of this relationship that they're saying that I should do? And that's the tax code. It's the rule book. It's just saying, go do this, right? And once you know the rules, you get to strategize. You get to formulate what you want to do and how to do it. And then you get to see, oh, does this type of part of the tax code affect me? I don't know. What the heck is this tax code saying? It just seems like a different dialect or different language, right? And that's why you start bringing in professionals that have different expertise in different areas to help your business, your knowledge base to increase so you can increase your wealth and you can increase that relationship with the IRS. The more you end up having, the more of the tax code you get access to. The wealthy do get wealthier. because they're the ones that are controlling what people are striving for. They're the ones that are creating that centralization. So just watching and listening, it just made me think, and I thought I'd just share those thoughts with you and just pass it along. I don't know if it creates more questions or if it creates fear or it's like, oh, that makes a lot of sense. Now I know. Now I know how to move forward and proceed. I don't know. I don't know what reaction what I have said will create in you, but this is an avenue for me to just kind of share my thoughts and kind of wonder what is everything we do eventually lead to the totality of the herd in centralization. Something to ponder and think about. Add your comments down below. Love to hear what your thoughts are. And if you like this content, feel free to give us a thumbs up. And if you haven't subscribed yet, click that subscribe button, hit the little bell for we drop episodes every Thursday. So appreciate you being here and investing your time here. And like I said, make it a great day.